Welcome to Limitless Trading. We wanted to set you up for success. Hopefully, you guys realize why I don't trade patterns. This supposed bull flag that was compressing, rejected, broke our 5212, which was a great short if you took it on the breakdown and you're just running stop loss. There is a support-ish 5150 from Thursday of last week, and there's the support from Monday. From today, we held 51.25 ish. I tell everybody when a support breaks down, wait for a back test. If 52.12 back test and rejects, take your short down to 50.35, but be very, very careful because that could be a bear trap still to come back up and retest liquidity at the 5,400. So I would say more to defer, to let a level hold. We're still oversold. So 50.35 defends, 40.59 defends, all these low levels that we caught before. Ultimately, 5,800, 5,700 defends. We're going to come back and test the liquidity here at 5,400. And I keep repeating, POTUS is going to want to get the three wise men out of here, and they can't get out if we don't test 56.30 to get all three out at the same time. So if 52.12 recovers, we're going back to 5,400-ish. If that breaks out, again, we're going to test 54.50. And if that breaks out, again, back to the 5,600 area. If 52.12 rejects, which again, it's a bearish week, till at least Thursday, Friday, you're shorted down to 50.35, 59.59, 59.08, so on and so forth. But just keep it tight because we are oversold. We can get some sort of new news and recover these levels, right? That's why I don't play patterns where it's bullish, bearish, double top, which it seemed to be more like we play levels, one level at a time. On the smaller time frame, 51.45 held. If 51.87 breaks out, you're going to 52.30 all the way back to the breakdown of 52.88. And then we have a gap, lower gap here at 53.23. We still have the gap up in the 5,600 area, but take it one level at a time. We want to see a back test. And I also don't like shorting when there's gap fills. I'd rather see 53.23 defend and then short back down to, 50.15. Because we do have, that's the trend line that we held from, the tariffs that weren't tariffs are coming back on. So I'm more inclined to see if 51.45 continues to hold overnight, maybe 51.16, and then get a breakout to retest 53.23. And then I'll keep an eye, do a short here if this fails to continue to roll over into Thursday and Friday, which is going to be our next long into Tuesday. Tuesday's probably our last long for the season. Or again, if 51.87 rejects overnight or 52.50, rejects, you can take your short and come back to 51.16, 50.88, 50.75. Keep in mind that there's Tesla earnings and there's a few other earnings that may, even if they're bad, the market may squeeze on whether, Elon says something positive, the autonomous event that he has in May. Who knows? We've seen bad ERs where a stock squeezes and takes the indices up with it. So be cautious shorting into earnings season. Earnings season could be a short even if earnings is bad, or it could sell off if earnings good. So I'm more of cash on hand, play after the earnings, let the market makers do their move, and then I want to see what happens Thursday, Friday to take our final long and close out any of our shorts that we have left for the season. Because historically speaking, even in April, if you just hold through the pain, by June 17th, we're pretty green. The market recovers almost everything between Memorial Weekend and then July, and then we're going to roll over like a ton of bricks. But again, I don't like shorting all of this down here. I want to short up here. I want the market makers to get greedy, to get excited, to be over bullish. So I take my puts. I'm more inclined to take longs on these oversold conditions than shorting oversold, shorting fear. I'd rather short greed and buy the fear. But if you have any questions, comment Discord below, subscribe, like, or let us know if you want to join our Discord. We have a wonderful training team that's here to help you beat the market.